Today's training class is going to cover the data input for Total Planning Suite. Total Planning Suite uses a single input and database to deliver two different planning approaches with Easy Money Power Planner or Golden Years Cash Flow. So I'm going to go ahead and pull up the program. You'll notice here, as soon as it's open, you can see the list of clients, so I could go ahead and open up one of these existing clients if I needed to make changes or make a new plan for an existing client. You'll notice also some buttons available along the top, so common tasks are available here, like creating a new client. Before we get into the data input, let's go over some of these menu items available along the top of the program. So the first menu item is the File menu. Here you can do some of those same basic functions that we have shortcut buttons for, such as creating a new client or opening an existing client. This is also where you can get into some import and export of client information. The next menu item is the Tools menu. Here we have the program settings and defaults. This is an area that you'll want to go in and adjust to meet the most commonly used information for your planning cases. So for example, asset classes, you can see the defaults here of cash, income, growth, and income. You'll want to customize this information to reflect the asset classes that you use in your practice. So it might be something like small cap, mid cap, growth, value. You can fully customize this information here. By doing it in the program settings, that means when you create a brand new client, it's going to be pre-populated with the information that you've set up here. So it will be a time saver for you to set this information up the way that you like it for most common cases, and you can always adjust all this information within the client's plan. So you'll notice all the different areas that you can set up as defaults in the program. So go through, make sure it's set up the way you like it, and that will be a time saver when you do create new plans going forward. Under Tools, we also have the ability to do some database administration. You can choose to back up your database, change your password, all available under that Tools menu. If you do have multiple planners logging into the same database, database administration is going to be the tool that you'll use to add those additional logins. The next menu item is Report Selection. This allows you to tell the program which reports to generate. So when you choose to generate the Easy Money reports, you can see what's selected. So right now I have Entire with Comparison selected. So when I choose to generate my reports, it's going to generate that full set of reports. I could narrow down that list of reports by choosing one of the predefined templates, such as Basic Report or Education, Survivor. I can also customize and create my own custom report by going into Create/Modify Custom Reports. This allows you to pick and choose the report pages and create your own custom set of reports. The last menu item we have is Help, where you can get to some items like the questionnaire. So this is something that you can print out and have the clients fill in. It will collect all the information required to create that financial plan. So having that populated by the client will be a big time saver for you. This is also where you can get into the help file for the system. You could do things like check on your license, check on your version number under About Total Planning Suite. Okay, now that we've gone through some of those main menu items, let's go ahead and take a look at the data input. So when I open up a client, in this case I'm going to open up the sample Alan Abbott. All the information will be pre-populated so we can take a look and see how information's been entered in the system as we move through the different areas. So I'm just going to double click to open up Alan Abbott. You'll notice I start with client information. This is pretty straightforward. This is going to be where you're entering in their names, their birth dates. You can enter in items like their address, but that is not going to be required by the system. All you really need to do is enter in their name and their birth date in this section. We also have additional tabs along the top to record their employment information, if you want to keep note of any other advisors that you might need to be in contact with that the clients have relationships with, and also notes. So if you wanted to create a note about the plan that you're working on or a meeting that you've had with the client, you can record those notes. They're used just for internal purposes. They'll display here. They will not be generated or included on the reports that you're generating. So once you get the basic client information in, that's when then you're going to enter the information for a plan. So the different plans we have are going to be listed under scenarios on the left-hand side. So in this case, two plans have been created: Retire at 65 and Real Estate. If I wanted to create a new scenario or a new plan, I could. just by clicking on New Scenario. I can also copy an existing scenario if I prefer. So if I click on retirement at 65, for example, I could click on Copy Scenario to make an exact match and then go in and make adjustments to that copied scenario, leaving the original case intact. So that's very handy if you have something like you've created a plan for them last year and this year they've come back to you, you want to update the information, you can keep that original plan intact, just use Copy Scenario and rename that copy scenario to 2014 Planning, for example, make the adjustments that you need to the data input and generate the reports. So you can have an unlimited number of these planning scenarios. So once you are in a scenario, this is going to be where you're getting into the data input used to generate those Easy Money or Golden Years plans. So the first section is assumptions. Some basic information here, such as the scenario name. This is how you're naming it on this left-hand side. The cover name, that's an important one. That's going to be the name that displays on the cover page of your Easy Money or Golden Years report. Things like a page header, a title, if you want to enter anything but the default, you can set that up here. The ages section is also going to be important, so make sure you have the client's retirement age, the life expectancy set the way you'd like it. This first life expectancy is calculated using the Uniform Lifetime Table. If you want to use anything other than that, just pop down to the next field, which is Alternative Life Expectancy, and the program will use the life expectancy number that you have here rather than the calculated value. So the next set of tabs are all going to be pre-populated from the default settings. So once again, if you've gone through the tools, settings and defaults and set this information up with your most common case, you'll have to make less adjustments when you're actually in the data input for a client. But you can see here things like your default rates of return that can be set, how cash flow surpluses would be reinvested in the system, some investment planning reports, and then we have some report options. So would you like your net worth style to be ownership, consolidated bank, asset details sorted by description? So some different report options available for you here, such as formatting. The report cover page lines, you'll definitely want to enter the information here. Again, this is all pre-populated from the settings, so if you populated your report cover page information on the settings and then created the file, it would be matching what you have in the settings. So you would just need to adjust this information if you hadn't done it already in your default settings by the time you created this new client file. So once we review the assumptions and make sure everything fits for the case that we're working on, we'll move down to the asset details section. So you can see a list of the assets that have been entered for the sample Allen Abbott case. And we could take a look and see the different types of assets that have been entered in the system. So for example, we have a Roth. Allen has a Roth account. So we can take a look here. We can see the description. So this is just the title that you're going to be providing. You can enter an asset account. That is optional, but it's something that you can use depending on the amount of detail that you choose to use when you're entering in the assets. In this case, we've kind of kept it a little bit more high level, which is most common. So we'd enter something like Allen's Roth or Betty's 401k as a single asset and enter in the total value. Some planners choose to enter in the individual holdings that make up the 401k or make up the Roth to track those individual pieces in more detail. If you choose to do that, that's when account could come into handy. So instead of having Allen's Roth as a single asset, we could create an account called Allen's Roth and then enter in the individual holdings of the assets and group them using that account. So the next item is going to be group. This is really just a descriptor. You'll notice there's a long list of groups available, so you choose what's the closest representation of how this account is invested. Liquidity, so again, whether it's cash and reserves, liquid, non-liquid, other, this is going to be used for liquidity analysis on the reports. Class is going to be where you can choose the class for the asset allocation model. Again, these asset class names can all be redefined to match what you use in your planning practice. Type, this is going to be an important one. The program is going to group the assets based on their taxation type, so all taxable accounts are going to get grouped together and projected going forward. Equity, other, tax-free retirement accounts, so that type is going to be a really important field to make sure you fill out. And one thing we get questions on quite often with the type is what's the difference between taxable and equity and other. And the difference is going to be Taxable accounts are something that's assumed to earn purely ordinary interest. So it would fall for things like your checking account, savings, CDs, money market funds, versus equity and other. This is going to be items that are invested in stocks and mutual funds, EFTs, where it's kind of earning a blended return. So some of the return could be interest, dividends, capital gains, or appreciation. Tax deferred would be non-qualified tax deferred. Tax-free is non-qualified tax-free. Everything else is going to fall under retirement plan. When you choose retirement plan, the next field will open up and you can choose what specific type of retirement plan it is, whether it's a 401k or in this case a Roth IRA. Just choose what's most appropriate. The owner, beneficiary. Then you can enter in the number of shares or price per share. If you want to keep it simple and enter in the total value, we can say Alan has $10,000 in his Roth. Perfect. If you have broken down the detail of the individual holdings, you do have the ability to tie an asset to a stock symbol if you choose to on this next tab. That's when you might want to use the number of shares and price per share, because that way you can go ahead and click on this update stock prices button and it will automatically get the latest stock quote for you. So you'd want to make sure you have the number of shares in there in order to get the correct total value. So with these assets, you have the opportunity to enter in the rates of return for each asset. If I entered all these assets and left the rates of return blank, that's when the program's going to go back to our settings and use these default rates that we see under retirement assumptions. So pre-retirement, it would choose to use for our retirement account 7.5%, post-retirement 7.5%. If you choose to instead enter in the rates of return for each asset, the program will use that rather than pulling from the default. So as soon as you go in here and you provide the rates of return, the program is going to use that rate rather than picking up the rates from the default settings. One thing I should point out as I'm saying that, if you fill out these rates of return, they could still get overridden at retirement if you've gone in and checked this box under retirement assumptions, post-retirement rates. Use this rate after retirement. By checking this box, we're telling the program that I don't care what I've entered in the asset details section. At retirement, we're going to be switching to these default rates that I have set up here. So if you ever see your rates of return changing unexpectedly on the reports, come back to your assumptions, check this retirement assumptions tab to see if this post-retirement box is checked to override your regular asset detail rates of return. So you can see you'll spend quite a bit of time in the asset section just entering in the holdings that the client has and getting this information entered in correctly. So stock information, we talked about tying an asset to a stock symbol. Monthly additions and withdrawals, this is where you can add any contributions that the client is making to this asset. So for example, if they were going to be putting $250 a month away into this Roth IRA, we can set that up. If it's something like a 401k, something that would allow company additions, the company additions field will also become available to you. So you can do a dollar amount and you can also do a percentage of salary for retirement plans. One thing you'll notice is we have this future change table down below. So this gives you a lot of flexibility and you'll see this throughout the user interface. So if we had just filled out the additions in the section above, what we would see is this $250 monthly contribution occurring from now until Alan's retirement age. If we want to do anything different, if we want to stop or start or adjust that amount at any age, we can using this table. So if, for example, he wanted to actually change his contribution at age 60, and he's going to put $300 a month in there, we can enter that. That would change their contribution. If I want to add a new row, I just click and a new row becomes available. So if he wanted to start taking a specific amount out of this retirement account at age 70, for example, so it's a Roth, we wouldn't get RMDs by default, but he did want to start pulling money out of his Roth, we could say, okay, he's going to start pulling $500 a month out of this account at age 70. So you can see you can use that to enter in both additions and withdrawals. Withdrawals just require a negative sign before the dollar amount, and the program would start taking distributions from that account of $500 a month at age 70. I'm going to go ahead and delete my changes here. But those age change tables, future change tables give you a lot of flexibility within the system. This information will also change a little bit depending on the asset that you have. For example, if we have a residence, you'll notice there's only one other tab, which is the residence tab. And this allows you to sell this home very easily and enter in a replacement home if they are going to be selling and replacing a residence in the future. If they were just going to be selling this home, for example, at age 80, we could say, okay, age 80, they're going to sell the home, they're going to pay 6% in sales costs, and it's appreciating, we'll say at 3% a year. So what we would see is income stream, essentially a one-time income stream at age 80, representing the residence sale at that time. If there is any liability associated with that residence, it would also do a balloon payoff and make sure that that loan associated with the home is paid off. So once you have all the different types of assets that the client has, then you can move on to the next section. So asset summary gives you a view, essentially a table or tabular view of the information that you've just entered in asset details, so you can kind of check your work. It's going to group the assets by their group, actually. So you can see all the mutual funds are grouped together, all the personal type assets are grouped together. So you can just check your numbers here and you can see the rates of return that you've entered as well. Risk and financial attitudes. So there's a risk tolerance test that you can provide the client that is included in the questionnaire if you are printing that out and providing that to them. So you can pick and choose their answers, and based on that, it's going to choose a risk tolerance level, or you can just drop this down and choose the risk tolerance level of your choice. And there's a financial attitudes quiz. This is going to be used for the risk, financial attitudes, and asset allocation piece available in Easy Money and Golden Years. The next tab is Qualified Plan Additions. So we saw, for example, when we were looking at asset details, that we could enter in the contributions for each specific asset. This is a way that you could just have the program automatically schedule the maximum contribution for one retirement account per person. So if we know individual one is maximizing his 401k every year, great, we can select that, and we would just want to make sure we didn't enter matching contributions in the asset details section because it could double count. So that's another trick to point out. If you ever run your reports and you're seeing the contributions much higher than you're expected to a retirement plan, you'll want to go back to this asset summary section, look at this qualified plan additions tab, and see if you have something selected that you didn't mean to have selected. So in this case, we would see an additional $17,500 of contributions into this 401k if we had chosen it by mistake. So I could choose a blank line just to prevent any automatic contributions. So you can do that per person. You can also choose to maximize a Roth IRA each year. So instead of that contribution I've entered to the Roth, if we wanted to say they're maximizing it, I could eliminate my entry from asset details and instead just check this box, and the program's going to ensure they're getting the maximum contribution, including catch-ups each year. The next tab is allocation. So the program does include an asset allocation piece, whether it's Easy Money or Golden Years, that will show the clients their current allocation based on the assets that you've entered and the classes that you've assigned, and a suggested allocation. The suggested allocation is going to be based on the risk tolerance level and the suggested allocations that you have set up in your default settings. If you want to use something other than the defaults, you can enter in the proposed here, and the program will use your proposed on this allocations tab rather than choosing the proposed based on their risk tolerance level. The next tab is rate changes. So this is another place that you can change rates of return in the system. So we talked about on asset details how you can leave all the rates of return blank if you didn't enter any here. That's when the program is going to pull from these retirement assumptions, or you could choose to check this box and override your asset detail rates upon retirement. If you want to do anything else, that's when this rate changes tab is going to come into play. So this allows you to change the rates of return by asset type at any age in the future. So we can see, for example, now the taxable type assets are earning 4.37%. So if we wanted to change that at some point in the future, we can just by saying, okay, he's 54 now, we are going to change this at age 60 and drop interest down to 3%. And what we would see on the report is the rate of return on the taxable assets changed from 4.37 to 3% at age 60. The second thing you can do in this tab besides change rates of return is to choose a cash payout option. And this impacts your Golden Years reports. If you check this box, what we're saying is that the client is like actually living on these account earnings. We want to show them as income and we want to use them towards expenses. So we would check this box to take all the account earnings in cash. By default, this box is not checked, which means all the account earnings would be reinvested into the assets rather than taken in cash. Last tab here is accounts, which I haven't entered any for this example case, but again, like we talked about in the asset details, if we had entered an account for Alan's Roth or Betty's 401k and then wanted to enter the individual holdings that makes up for it, we would see the accounts here and the assets that we associated with the accounts when we clicked on the account that we'd selected. So once you're through with assets, we move on down to dependents. That first section will take you just a little bit more time than the rest, just getting through the asset entry. So for dependents, we're going to be collecting their age and, if they have college costs, the education funding information. So in this case, we have 2 children. The parents are planning to spend, to cover 100% of their college education costs. We can set an inflation rate for education costs as well as a rate of return assumed that they could earn on their education funds. This checkbox is going to be important here. Deduct education expenses from savings and investment assets. If this box is not checked, that means that the program will generate an education funding report, so it will show the clients how much they would need to set aside each year in order to fulfill their education costs coming up in the future, but it won't actually impact their retirement projection. So it's not an expense that's going to be pulled from their assets for the projection. If we check this box, we're saying, okay, yes, still give me that education funding report that shows me how much I need to save, but anything that I haven't saved as the client is actually going to come in as an expense that would get pulled from the client's assets. So any uncovered education costs would get pulled from the client's investment assets. So when we're entering in the dependent children information, you'll want to make sure you get the birth date in there, the first year of college, the number of years, and then the college costs. Also, if they have any funds currently saved and if they're making any monthly contributions, you can enter that here. So the program would first use what funds they have available and what it's built up to with monthly contributions, and then it would pull from the parents' assets to cover any uncovered costs if you have this box checked. One handy thing we have in here too is this college cost estimator, so you can pick and choose, kind of get a good idea of a feeling of what college might cost. So for example, we're in Oregon, so if I scroll down I can narrow it down to schools and universities in Oregon, and you can see the list of colleges here. So we're in Corvallis where we have Oregon State, and we said, okay, if this kid wants to go to a state school in Oregon, let's just use Oregon State as an example, and it's in-state tuition, so that's a good deal. We can add in housing costs, and you can see it will help you come up with that total estimated cost per year. So you can choose in-state, out-of-state, and whether if you want to include housing costs or not, or any additional kind of cushion you would like to have included. Okay, so once you have the dependents in there, again, this is a section you could skip if you are not needing that education funding piece or if they do not have dependent children. You move on down to the estate section. So the estate section is going to be used for the estate planning reports, as you could probably guess. The first item is going to be just checking what kind of estate strategies the client already has in place. So if they have a will, great, check that box. If they have a credit shelter trust provision already set up, we could select that. So you would just indicate the planning strategies they already have in place. We could set things like their administrative rate, and an assumed tax rate to apply for qualified plans. So it would essentially show the heirs and after-tax value for those qualified plans, as taxes would be due at some point in the future. Also, there's an estate values tab. This is used for a specific set of reports, which right here you can see it says that it applies to the estate option reports. It's E21 through E24 in either easy money or golden years. This allows you to evaluate a specific age of death for the estate planning report, so you can pick an age in the future. You can also enter in information regarding gifting here as well. So if they're going to be doing living gifts or charitable gifts, you can enter those, and those will be reflected in the estate reports. If you're not needing the estate section of the reports, you could skip this data input. The next data input section is income. So this is going to collect, as you can probably guess from the top tabs here, their earned income, Social Security, pension, and then miscellaneous other income and expenses can also be entered here. So salary and wages versus self-employment for either individual can be entered in the system. Once again, just like the other data input sections, you'll notice we have that future change table to give you a lot of flexibility. One thing we get questions on quite a bit here are the different columns, tax versus cash flow, disability, and survivor. So I'll go ahead and explain the differences between those. Typically they're the same all the way across, so by default, if you enter in the 75,000, assume it to just carry over across all the other data input factors, but they're there to give you flexibility if you need them. So tax dollar would be how much is individual one earning salary and wages that's going to be reported for taxes. So typically that would be the full reportable income. Cash flow, typically the same, but again, if you wanted to reflect a different value for the cash flow report, you could. Disability and survivor, that's where we get the questions most often. This would be how much individual one would earn if his spouse were disabled. And same with survivor. This would be how much would Alan continue to earn if his spouse, Betty, were to die. So you might have a situation where, in this case, let's say Betty was not currently working outside the home, but if they're in a survivor situation, she would go ahead and make the choice to start working again to provide some income for the family. So we could say she's not earning anything now, but if Alan were to become disabled or if he were to die, she would go back into the workforce and we would assume she would be able to earn $60,000 a year. So it gives you flexibility if you need it, but again, most common situation, it's the same all the way across the board. An example using the future change tables, once again, so in this case, if we enter the information up above, current age, he's earning $75,000 a year in salary and wages. It's going to increase at 3% from now until his retirement age. Perfect, easy. But if we want to do anything different, that's where we can use this table. So for example, if he's going to be retiring at 65, as we can see, but he's planning on consulting, we can say age 65, still going to assume his income is going to increase over time, but he's only going to be making about $15,000 a year. So he's retired, but he's still out there consulting and earning some money. By the time he's age 70, he wants to be completely done, and then we can ensure that that income stops from the projection. So anytime you use these age change tables, you need to enter in the age that you want to make the change, and then also if it's something that would be stopping, you would need to enter in the age that it stops. So if I had entered in just 65 and 15,000 and nothing else, the program is going to continue this $15,000 of income from 65 until his life expectancy. So all I need to do is enter in the age I want this income to stop and all zeros to ensure the program sees that entry as the age that the income is changing to zero, in other words, stopping. So the next tab we have is Social Security. So the program will estimate Social Security benefits based on their earned income. So if you leave this information blank in the age change table, the program will go ahead and estimate it based on their earned income. And if you choose, instead, if you have the estimated dollar amounts, their Social Security statements, that's perfect. Go ahead and just enter the information in here. So you just enter in the age you want Social Security to start and the dollar amount. If they weren't qualified to receive Social Security benefits, or if you wanted to keep them out of the projection, you can check that box. If you wanted to be more conservative on the estimated Social Security benefits, you could choose to show a reduced percentage. But in most cases, people have this set to 100% with the increase rate that they would want to assume on their Social Security benefits. And then easy money, you'll want to set the benefit that's assumed to be taxable as either 0, 50, or 85%. Golden years will actually determine the amount that's taxable each year, so you don't have to worry about that for golden years. Of course, for the most common case, it will be 85% taxable. The next tab we have is pension. So this is going to be for defined pension benefits. So in this case, individual one has a pension, It has a survivor benefit of 50%. So if Alan were to die in retirement, then Betty would go ahead and earn half of that, or receive half of that pension benefit each month. So we could see it's coming in at $65 for $550 a month, increasing at 2%. Perfect. All we need to do, this would essentially run until his life expectancy. At the point of his life expectancy, any survivor portion available to Betty would pick up until her life expectancy. So we have a spot for 2 pensions per person. If it's not taxable for state tax purposes, you can check that box to indicate that. So the last tab on this income section is other income and expenses. This is where you can add items that don't necessarily fit other places. So for example, we have an inheritance coming in. This is a one-time income stream. So at age 61, it's not happening at current age, so all that was left zero. Actually, we do have a 3% increase because we want that $45,000 to increase from now until the start age. But what we would see in the projection is at age 61, we would see $45,000 in today's dollars, so it would actually be inflated in future dollars, increasing at 3% on the projection, come in as a single one-time special income. And at age 62, by having all zeros, that ensures that income would stop. So it would only come in for age 61. So that can be used for income items, and it can also be used for expenses. So extended travel, for example, they have at age 65, so upon retirement, that they're going to be spending an additional $8,000 a year until age 70. So they're going to have 5 years of extended travel for those first years of retirement that we're going to factor into the projection. So once we have these items all entered, we can move on down to the tax data section. One thing that you do need to be careful of or mindful of is using these other income and expenses for easy money specifically, because easy money ignores pre-retirement regular cash flow. These items are an exception to the rule. So really just prior to retirement, be mindful of the items that you're entering here, and know that if you do enter an income stream in other income prior to retirement, the program's assuming that that is essentially a special income that's going to get reinvested. So that's what this note is saying here. So for example, it's perfect for something like an inheritance. This is coming in at age 61 before retirement, and it is a $45,000 income stream that would come in and be available and reinvested into their assets. If it's something like income that they're using for their regular spending, we don't want to enter it here. We would want to enter it in a different section instead. So if you have any questions about that, just call our tech support team. But again, pre-retirement, be mindful of how these special income and expenses are treated for easy money. So the next section of data is tax data. This is where you can make adjustments for tax reporting or the cash flow reports. Typically, you're not going to need to do much in this section, but if, for example, a client had a capital loss that they were carrying forward from a previous year that the program wouldn't know about, we could enter the information here. So we would enter in, for example, at age 54, current age, the amount that they have remaining that they're carrying forward, and 55. So what we would see here is one report, for the tax report, we would see this loss picked up, and then the program would be able to continue to carry it forward until that loss was used for tax purposes. We wouldn't want to put it under cash flow in this case because it's not an expense, it's not a negative cash flow this year, it's really just something that we need to know about. It's a loss for tax purposes that we're carrying forward. So this gives you some flexibility to adjust the amounts for tax report, cash flow, and disability. This tab you'll use more often than that first. This is going to be where you're going to enter in their tax filing status, so this will be an important one, joint, single, head of household. One thing to point out here, if you ever run your reports and you see it say joint the first year and then single the years after that, that's most likely because you don't have the check if married box on the client information checked. So it's going to say, okay, you've chosen joint, I'm going to let you do that for the first year, but after that, you're not married, so we're going to change to single. So if you ever see that on the report, just make sure you have that check if married box checked. So you can set the number of exemptions for the system, you can set the state for tax purposes, so it will include this it will include the state taxes if you have the state tax rates set up in your program defaults and settings, under the tools menu. And from there it will say, okay, the client's in Oregon. It will look to the rates we have in the default settings for the state of Oregon. So you can see the breakpoints have been entered, so the program will be able to include that state, not estate, tax calculation. Optional tax rates, easy money only. So easy money calculates their tax rate in the current year, and it will continue to use that tax rate throughout the projection unless you override it. So if you want to use something different for pre or post retirement, you can change that tax rate here. Golden Years actually recalculates the amount of taxes due each year, so it doesn't just apply one tax rate to estimate the taxes like easy money. So it's only needed for easy money. Itemized deductions. So this is where you can enter in itemized deduction information. This will be used for the tax reports. The expenses associated with these will also get picked up for you automatically, so you don't have to enter them in both places. You don't have to enter in the medical expenses in itemized deductions and the same expenses in personal expenses. So entering them here will ensure they're picked up for itemized deductions, for the tax reporting, and it will pick them up for the expenses as well. So the last tab is current year overrides. This is allowing you to make adjustments again to the current year report only, but current year tax, cash flow, or disability report if you wanted to change the amount of interest that displays. By default, the amounts of interest, dividends, capital gains, and capital gains and state tax deduction is going to come from the assets that you've entered and the rates of return that you've assigned. But if you wanted to report something specific, you wanted to make it match their tax return that they provided for you, you could check this box and enter the specific amount of interest that you want to display on the tax report, for example. So the next section is liabilities. This is going to be when you're entering all any debts that they have. So for example, we've got some credit cards, an auto loan, a residence mortgage. The biggest thing here is just making sure you have the current balance, the monthly payment, and the interest rate. So it's from those three pieces that the program will amortize the loan. So it will look at the balance, it will look at the interest rate, it will apply the payment, so whatever doesn't go to the interest is going to get applied to the principal balance, and the program will amortize the loan and pay it off appropriately based on those variables. You can select a balloon payoff age, so if you wanted this to be paid off at a specific point as a lump sum in the future, you can set that. For this home, this residence mortgage, we can also tie it to a residence asset. So when we looked at the asset details and we had the residence and we chose to sell it in the future, this is how the program will know that this loan is associated with that home and ensure that this mortgage gets paid off at the same time as a residence sale. Let's see here, any other tricks I can point out. You can also start a future liabilities in this section. So if they were planning on getting a home equity loan, for example, next year, you could set the date opened as 2015, for example, a year out. And you need to just enter the balance that it would be at that point, the monthly payment, and the interest rate, and it will start the loan at that future date. The next data input section we have is insurance. So this is going to be collecting the information from any life insurance policies that they have, as well as miscellaneous insurance. So things like automobile, disability can be entered in this insurance section. So first we have the regular life insurance policies. If you wanted to keep the death benefits out of the projection, we have check boxes available for you to keep those out. Let's see here. So when you do add a new policy, you can see a summary of the information that's been entered for the existing policies here and the data input that you can change down below. So description, what type of policy, who's insured, who's the beneficiary, current annual premium, face amount, and cash value, as well as the retirement information. One thing that you'll want to make sure you do is for permanent policy, fill out the current information as well as retirement. So if you had filled out just current and left retirement all zero, the program would treat it as if that policy ended because it would see zeros in there for retirement. So if it is a permanent policy and it will be continued, make sure you do fill out the retirement section as well. And let's see here too, there's a worksheet tab, so if it's something like a term policy, you can tell the program specifically when it ends. If it's term policy that goes until retirement, great. We could just enter in the current information and leave the retirement all 0. But if it's something like in this case that's a 5-year term, we would want to stop this at a specific point in the future. So entries here go a little further than 5 years. But let's see here, at age 60, or 59 technically, delete this, 59, we could say 0, and that would tell the program at age 59 this policy is going away, and it will no longer be available to be included in the projection as part of the death benefits. We have a summary of the life insurance that's been entered in the first tab. And then we have miscellaneous insurance, so you can see things like any current disability policies they have. Long-term care can be entered here, medical, homeowners, property and casual or other can all be entered in this system. Like we saw with the tax data, itemized deductions, any of the premiums that you enter here, the program will include as part of their expenses, so you don't have to worry about entering them in both places. So the last tab is disability long-term care. This is used purely for easy money. So if you're running golden years reports, you don't need to enter the information here, or if you're running easy money and not including the insurance projections or specifically the disability and long-term care projections, you could skip this. But it's going to be used for those specific reports in easy money which evaluate coverage for a disability or long-term care type situation. The next data input section is personal expenses. So you'll notice in bright red it says do not include itemized deductions, debt payments, or insurance premiums. And again, to reiterate that point I was just making, the program will pick those up based on the entries that you've already provided, so you don't have to worry about them here. One thing that's very handy is to see the amount of total expenses that are entered in the system is using this express report, and you can look at expense summary. And this will show us the total expenses already entered in the system. So we can see that there's already $13,000 of itemized deductions entered. They're making education funding deposits. They have almost $3,000 in life insurance premiums that they're paying. So you can see the total expense. So whether it's personal expenses, which are entered in the section that we're on now, or expenses that were entered in these various sections, and you can see what the total amount of expenses that the program will be included for the projections here. So again, that's just under Express Report, Expense Summary. And then other than that, you're going to be entering in their laundry list of expense items here. So whether it's groceries or eating out, you can do it line by line. Again, if you provide that questionnaire, it does include a budget line item. But you can also just keep it simple and just enter in one total expense. So if you wanted to just have a personal expense category, you could enter in the total monthly expense in a single category rather than breaking it down if you choose to. This is another area, just like the rest, several of the other data inputs we've seen. It's got those future change tables, so you can stop and start and adjust an expense at any point in the future. When you are entering in expenses, this is something that we get asked quite a bit, is if you ever see reports and their expenses are twice as much than you expect, then we tell you to come here, look at the expense, and see if you maybe entered in the expense both monthly and annual. So for example, at retirement age, we have $1,000 a month. Every once in a while, we see $24,000 entered here. Oops, that's doubling it, $12,000. The same value entered in annual, and what we would do if we ran the reports is we would see $24,000 of expenses. So you just need to enter monthly or annual, unless it's something where there's like a monthly fee and an annual payment, then you could combine the two, but just make sure you're not duplicating the same expense under monthly and annual. Let's see here, also for each of these items you can set an inflation rate. If you wanted to change the inflation rates for all of your items rather than having to click through each one and change those, there's an autofill rates button that you can use. You can use to set that increase rate or inflation rate on current expenses, retirement expenses. You can also use it to change the disability and survivor percentages. So in this case, we have 80% for disability and survivor. This would be if death were to occur, essentially, or a disability situation. We're assuming their expenses would be reduced by 20%. So here's a good summary of the expenses that have been entered in this personal expense area. So we can see it's $42,000 now, $36,000 in retirement. But once again, we do have those additional expenses that we can see under expense summary, where it's actually getting to a total of $77,000 for their current age. So once you have their personal expense entered, you can move on to the next section, which is rental real estate. So this might apply to some of your clients or it might not. In this case, we don't have a property entered, but you can see the data input here. This is going to collect all the information pertinent to rental real estate. So it's going to collect the information it needs for tax purposes, so the cost basis information, expenses, mortgages, improvements that they'll be making, as well, of course, as the income that they would be receiving from the rental property. So if you enter in this, it will collect all the information it needs to seamlessly fold the rental real estate into your planning projections for easy money or golden years. The next data input section is for survivor. So this is going to be just some basic information for how much you want to assume for things like final expenses, any need for emergency funds, any amount of capital that they wish to have at life expectancy. So if they want to make sure that they have at least $250,000 to pass on to their heirs, for example, we can enter that information here. This is just going to be used for easy money, so you do not need to worry about this section for golden years, other than I think the final expenses actually used. It might be used for the estate reports and golden years. So the next data input section is stock options. So kind of like the rental real estate section, this might not apply for every client, but if it does, it's going to collect all the information for the stock options that they have available, and it's going to figure out the appropriate tax and cash effects of exercising and selling these stock options in the future. So you do need to make sure that you have all the dates filled out. So make sure you have a vesting date, exercise date, and an assumed sales date in the future. Financial goals. So this is going to be, it's kind of like the special expense or other expense section that we saw under income in the last tab there. But by putting an expense here, like a retirement trip, that's something I could see going under other expenses as well. But by putting it here, you get a special report called the goal funding that's going to show the clients, kind of like the education funding reports, will show them what they need to set aside now. If they were to put a lump sum away today or make annual payments towards this goal, what they would need to save in order to build up the funds to meet this goal. So something like a single year expense is going to be perfect for this financial goals section. So in this case, they have retirement trip, one-time expense of $15,000, and a sailboat at $65,000, one-time expense of $20,000. What we would see is a report showing them how much they would need to set aside in order to fulfill those goals. Like education funding, you can choose to include the expense or not based on this checkbox here. So if you're saying yes, make sure we fund these goals and include it in the projection as an expense when it occurs, we'll check this box. If not, they just want the goal funding report to kind of have an idea of how much they need to save, we could uncheck this box and it wouldn't be an expense included in the projection. So we're getting down to it here. The last of the data input is the Monte Carlo. So this is going to be where you're setting the portfolio rate of return. You're going to be setting the standard deviation. You see the portfolio rate of return here is 5%. This is going to come from the assets that we've entered under asset details and the rates of return we've assigned. So this is what the weighted average portfolio rate of return is. So we'll look at all the different assets, all the different rates of return, come up with the weighted average return of the total value, the return that they're receiving as a weighted average. So the standard deviation, you can click calculate and the program will calculate one for you based on that portfolio rate of return. So the higher the portfolio rate of return, the higher the standard deviation will be, assuming that they're invested more aggressively, versus a low rate of return will provide a lower standard deviation. But you can see the probable range. So the Monte Carlo does go out a full 5 standard deviations, but you can see that 95% of the results will fall between the first 2 standard deviations, and it's going to provide that range for you here. So if you want to have a bigger spread, all you need to do is type in the standard deviation you wish to use instead, and you can see how it impacts that probable range when it's pulling those random rates of return. 95% of the time with this setup, it would find a rate of return, as low as a -9% or as high as a 19%. You also have the option to set a standard deviation on inflation if you choose to have inflation be a variable for the Monte Carlo as well. The last item here is fat-tailed distribution, so you can check that box. It's going to provide more emphasis on those extreme negative market events. So you can use that, it'll make your Monte Carlo a little bit more conservative for the projections. So from there, that's everything that you need to run, either the easy money goal-based planning reports or the golden years cash flow-based planning reports. Before we end the class here, just think of anything else I really need to point out. One thing I missed talking about was the help within the system, which is a great thing to talk about. There is a question mark on the top right-hand side, or you can press F1 on your keyboard. That's the fastest way to get to the help for the specific page you're working on. So rather than going up to help and browsing through the contents here, it's quickest just to press F1 on your keyboard or the question mark on that top right-hand side. It will open help to the specific window you're working on. So for example, we're in the Monte Carlo, perfect, hit F1, it will pull up the help. So it talks about some of the standard deviation, how it's calculating the different standard deviations based on the portfolio rates of return, and it's going to give you a good explanation of the data input and what's expected and what you need to know. So anytime you do have questions in the program, recommend pressing F1 on your keyboard, pop up the help, take a look at that. If you still have questions, the next fastest thing to do is really just to give our tech support team a call for assistance. And we're available anytime, weekdays I should say, not anytime, but Monday through Friday at 6:30 a.m. until 5 p.m. Pacific time. So if you just call our toll-free tech support number is 877-421-9815 and press extension 0, you'll be able to get an answer really quickly for any questions you have. So whether it's trying to model something specific or interpret a result on the reports or track something down, the help support line will be able to be of good assistance for you. So I think that's everything that I wanted to cover for today's class. That should cover everything that you need to do to go ahead and generate either those easy money or golden years reports. So thank you very much.